For the first time since March of 2022, the Bank of Canada has held the overnight rate steady. So in this video, I'm going to be breaking down what went behind the decision to hold the rate steady and what's next to come. Before we get into this video, I'd ask if you can like, subscribe, and share this video with a family member or friend to help my channel grow and reach more Canadians who are looking to learn about the mortgage and real estate industry. So as I mentioned in the intro, the Bank of Canada has held the overnight rate steady for the first time since March of 2022. For those of you who don't know, the overnight rate is the rate at which banks borrow money on the overnight market. So when the overnight rate fluctuates, banks will also be changing their prime rates to keep their margins. For example, if the overnight rate was to increase by 25 points, then banks will also be increasing their overnight rate, most likely 25 points. There are some outliers. Some lenders have their own prime rate, but most of the time, prime rate from lender to lender is pretty consistent. So the current prime rate is 6.7%, and that's the highest it's been since 2001. And this is after a year of aggressive increasing to the overnight rate. The Bank of Canada increased the overnight rate 4% in a year, and this was an attempt to control the skyrocketing inflation we saw. So now let's look what went behind the decision to keep the overnight rate steady. So first off, the end of the last monetary policy report. So when the Bank of Canada announces a rate change, they also release a press release to kind of go through what their thought process was. And in the last one, the rate hike in January, at the end of it, they stated, if economic developments evolve broadly in line with the MPR outlook, Governing Council expects to hold the policy rate at its current level while it assesses the impact of the cumulative interest rate increases. So this is the first time they've hinted at a rate pause, but it's important to note that this doesn't mean that they're done increasing rates. This just means that they're going to be more data driven moving forward when making decisions with the overnight rate. In 2022, they were almost trigger happy with increasing the overnight rate meeting after meeting because they knew month over month inflation was too high. They didn't need the data to back that up. Now with the CPI starting to come back down, they need to start analyzing that data before they make decisions, just so they don't push our economy into a deeper recession than we have to go through. Another factor that went into this rate pause decision is the GDP numbers that were just released. GDP by industry data shows that the growth in the Canadian economy decelerated for a second straight quarter, edging up 0.2% in the fourth quarter of 2022, the slowest pace of growth since the second quarter of 2021. So this data suggests that our economy is starting to slow because GDP is a good indicator if our economy is growing or shrinking. And this is a good sign because this is what the Bank of Canada is trying to do with these rate increases, slow down our economy and let supply catch up with demand. Now, inflation has started to come back down, but is still too high for what the Bank of Canada wants. The CPI sits at 5.9% right now, and the target range is between 1 to 3%. So there's still work on that end. As I mentioned, the Bank of Canada said they're going to be pausing rate hikes, not necessarily stopping rate hikes. Yes, we have started to see some positive data demonstrating that these rate increases are working, but there is still a little bit of concerning data coming out that the Bank of Canada is going to be keeping an eye on in these coming months. First off, let's talk about population growth. Statistics Canada says the country's population grew by 362,453 people, or 0.9% between the months of July and October of 2022 alone. The federal agency is attributing that to a rise in non-permanent residents, including work permit holders and people fleeing the Russian invasion of Ukraine. It's the fastest single quarter growth since the second quarter of 1957. So why is this a concern for the Bank of Canada? See, inflation happens when there's too much demand chasing too little supply. So a growing population means that there's also going to be growing demand in our economy for goods and services. Now, population growth does have its advantages, like an increased labor force, meaning there will be more goods and services being produced. But when we have such a shortage of something, especially something like housing, it can really drive the cost up when our population is growing so quickly. Now, another statistic the Bank of Canada is going to keep an eye on is the unemployment rate. The Canadian labor markets right now are stubbornly tight. The unemployment rate right now is at 5%, just shy of the record low of 4.9%. Now, this is typically a good thing when we have a low unemployment rate. It means more Canadians are working, but in regards to inflation, it can put some upward pressure on it because, like I said before, inflation happens when too much demand chases too little supply, and more people working means more money in the pockets of Canadians, meaning that's just more demand and more spending money. In the monetary policy report that was just released from the Bank of Canada, it stated that overall the latest data remains in line with the Bank of Canada's expectations that CPI inflation will come down to around 3% in the middle of this year. So the Bank of Canada is predicting that we're going to get to that 3% range in the middle of this year, which would be a great thing if it did happen, because that's what the Bank of Canada has been trying to do with these rate hikes. But keep in mind, these are just predictions. There's so many factors that can change the outlook of our economy, so don't get your hopes up too much about what they're stating here. Another rate hike could be on the horizon. The Bank of Canada is going to look at the data coming out to make their decision, and depending what they see, that's going to influence what they do next with the overnight rate. So the only way to know exactly what they're going to do is wait and see. The next Bank of Canada rate announcement is on April 12th, 2023, so mark that in your calendars. And I hope this video helped any questions you may have. If it did, please like, subscribe, and share this video with a family member or friend who'd also find value in it. Don't forget, I have those 3 free mortgage guides: first-time homebuyers guide, refinancing guide, and you found your dream home. Now you need to obtain financing for that. So those are in the link description below. Definitely go check those out. And finally, if you have any questions, please comment them below. I'll be sure to answer every comment. And if you want to book a one-on-one call with me, I have my calendar link below. So go click on that, fill out a time slot, and I'll be happy to answer any questions you have.